Hello, and welcome to Succeeding in a Post-COVID Economy. A lot of the conversation and research around COVID has been, what is the immediate impact of this crisis? How many people were laid off work? How many people lost their jobs? And how many jobs are available today? There hasn't been as much of a conversation about what are some of those macroeconomic long-term forecasts that we can project based out of as a result of the impact of COVID-19. What is the long-term impact of this short-term crisis? And so what I wanted to share with you today is some of the research that's been done around this, some of the projections we can make, and then also leave you with some practical tips about what does this mean for an individual as a job seeker or someone looking to succeed in this economy. And so today there are really three main things that I want to touch on. What are the immediate circumstances? What's been the immediate impact of COVID-19? With a couple of different lenses for analyzing that. What are those longer term projections? Again, what are those macroeconomic long-term projections as a result of this short-term crisis? And then lastly, practical advice. So what? What does this mean to me as an individual facing this reality? What can I do about it? And now, before we get into some of those longer term projections, the first thing I did want to highlight is, again, our collaboration as a part of the Charlotte Regional Research Collaborative, working with other organizations to share and publish a regional COVID-19 dashboard. This dashboard really highlights, again, the immediate impact of this crisis. So getting an understanding for the current unemployment, the current expenditures, the current job postings, and understanding what's the projection around some of the industries that have been most heavily impacted, like hotel occupancy, the tourism and accommodation industry, and then real estate, commercial real estate as well. And so this is the best source, still the greatest source that we have as a region to understand where are we today as a result of COVID-19. So I did just want to remind everyone that this is publicly available. This is on our website. It's also on the Charlotte Regional Business Alliance's website, where you can go and see more about the current impact of COVID-19. And so when we're looking at this short-term impact, the first thing I wanted to share was just the number of jobs that were available as a result of COVID-19 by industry. We know some industries were impacted more than others as a result of this crisis, and some industries are recovering at different rates just due to the nature of how they operate. And so when you look at the screen for the Charlotte area, the job postings by industry, you can see certain industries such as retail trade, that blue line that you see on your screen. When you look at the month of April, if you see right here, this was one of the industries that was hit the hardest and had that sharp decline. But again, that industry recovered faster than a lot of other industries. And so it was able to recover quicker. But at the same time, the next thing that we're beginning to see as we head into the winter months is we're beginning to see, again, a downward trend for a lot of these industries as we're hitting that, again, that W-shaped recovery. We had an initial wave, a rebound, and then as we go into these winter months with increased case counts and other states putting in new restrictions, we're going to begin to feel some of these effects as industries, again, have a decline in the number of job postings. And so when you look at that holistically, looking at the total number of job postings in April, just to give you context, there were about 27,000 total jobs posted in the Charlotte area, which was, again, represented the worst month as a result of COVID-19. And so what I have here is, instead of an industry-specific view, just total job postings for the Charlotte area. And so again, just a point of clarity, this is not employment, so I can't necessarily say the number of job postings correlates to the number of people that were employed. This is just number of postings that you'd find on Indeed, LinkedIn, number of openings for jobs in a given month in the Charlotte area. And so again, what I wanted to point out is that month of April that we talked about, which is the worst month for total job postings to date as a result of COVID-19, around 27,000, is that was the worst month to date. And as we're looking at the trend over time, we saw some recovery, and then we're seeing in November here, we're going back down again. So this is what we talked about earlier, that W-shaped recovery. We're starting into that second decline as we're seeing some states again begin to shut down, the impact as the virus gets worse throughout the winter. So we're seeing that second dip occur here. But just to give it some important context, again, the month of November was around 30,000 jobs posted, April was 27. But if we look at this and we look at 27,000 jobs posted in April and we compare that historically on a longer time horizon, what we begin to see is that if you look at the month or the year of 2017, the month of April, there were still more jobs posted at the height of COVID-19 in Charlotte than there were in any given month in the year of 2017. And the reason I say that is not to undermine the impact of COVID-19 on job postings, but to give you some historical context to say, when we are looking locally and making these projections, we can't look at this historical data as much in Charlotte because the growth for the region has just been so astronomical that it's outpaced the impact of COVID-19 essentially. And so that doesn't mean that the impact hasn't been great. It just means looking at that historical data isn't as reliable locally for that reason, because of the rate of growth. And so again, when we're talking about, looking at that local data, well, we can't go back 2 years to reference absolute values. Again, we can go back just a year ago to reference those absolute values to say, where are we today versus where we were last year? And so what I have here is, again, the top jobs that are available in the Charlotte area in 2020 and comparing the number of postings in 2020 versus 2019. And what you'll begin to see is something kind of an interesting trend on the screen is you'll see most jobs are down. Most jobs, like if you're looking on the screen, you can see project management, that is way down in 2020. Business analyst, that's significantly down again. But if you start looking, you'll begin to see a couple of jobs where there actually has been an increase from 2019 to 2020. You'll see sales representative is up. You'll see warehouse associate, that's up significantly. Delivery driver is up significantly. Maintenance technician is up significantly. And so if you haven't noticed already, there's a little bit of a trend in the types of jobs that have experienced a decline and the types of jobs that have been in increased demand as a result of COVID-19. And so this is what I was talking about, that trend that we're starting to see develop is breaking down those open positions by their projected salary. A lot of the positions that are those frontline workers where they're lower paying jobs, they've actually seen an increased demand. The positions that are paying $40,000 or less annually have increased in demand since 2019, whereas those jobs that pay $40,000 to $100,000 have significantly decreased in demand. And so again, this is an important thing to point out here is I'm talking about openings, again, not employment. So there is a bit of a distinction between jobs that are available and employment. But again, we're seeing that trend, that discrepancy between an increase in low-paying jobs and a decrease in high-paying jobs. And so now we're going to get into the long-term implications of this short-term crisis. And so the first thing I have is, again, building on that previous slide where we looked at it from an immediate standpoint about what is the salary for currently available positions. What we can see is over a longer term, over a longer horizon after a pandemic, we tend to see rising inequality, which would track with that sort of information, showing that there is a wider disparity between those at the top of the income ladder and those at the bottom of an income ladder. After a pandemic, you'll see that grows up to 5 years out, that there's increasing disparity after a pandemic. And so we talk about income inequality rising as a result of the pandemic. I think given the focus in Charlotte around economic mobility, that's something to keep a keen eye on. However, we'll also have to understand what are the economic forces at play that will either set us up for success or failure in terms of moving the needle on that issue. And so what I have on the screen here is some research about the impact of pandemics on interest rates and on real wages long term. And so I think when we are dealing with a crisis, it's natural for us to go back and look at historical evidence to say, when was the last time we experienced this? What worked then? What didn't work? And then using that information to develop a strategy and a response. And so I think a lot of people are looking back to 07, 08 as the most recent recession to say, What did we do then? Let's learn from that instance to inform our strategy responding to COVID-19. And the one point that I did want to make out, an important point of distinction, is the economics behind the 07-08 recession were fundamentally different than this COVID-19 induced recession. And you'll see over on the left-hand side, for example, the impact on interest rates remaining depressed for an extended period of time. We see this stretching out over a long period of time. This paper did some analysis on pandemics versus wars and how they impact economies. And so as a result of COVID-19, absent any other intervention, we should anticipate, interest rates remaining low for an extended period of time. Additionally, this is what I was talking about as fundamentally different from the 07-08 recession, is that pandemics tend to actually increase real wages over time. And that's explainable in part by the reality of people exiting the labor force for a variety of reasons right now. And also keeping in mind that when I'm talking about increasing real wages over time, that's not necessarily equitable or income equality increasing. So those gains are likely to be experienced by those top earners, whereas those bottom earners are not likely to realize as much of that rise in real wages. And again, conversely, you can see the impact of wars would actually be to suppress those real wages over time. So this is just, again, a quick snapshot of some of the long-term impacts that we can project as a result of this pandemic. And just to build on that last point about that projection of real wages increasing over time, what I have for you on the screen here, this shows hourly earnings for individuals over time, and you can see that huge spike on the screen over on the right-hand side right as the pandemic hit, as we saw people exiting the labor force, that large spike jumping up to try to get people to stay in the labor force and continue in certain positions. But even overall, you'll see that percentage increase in hourly wages is much higher than it was pre-pandemic. So I think that trend, we're already starting to see that bear out in the numbers, that the real wages might be climbing as a result of the pandemic. And so again, just to recap the trends that we're seeing a decrease in the labor force as individuals are exiting the labor force for a variety of reasons, and there's strong disproportionality in who is exiting the labor force. We're seeing, again, women, it's around a 1 in 5 chance that they are considering exiting the labor force as a result of this pandemic. And for those individuals that do remain in the labor force, we're seeing that increase in their real wages, that projection over a long period of time. And then we've even started to see some of that occur immediately on this short-term basis. As a result of there being less workers and less people in the labor force, we're seeing an excess of capital. And again, through increased inequality, as that income inequality tends to grow, that means more disposable income. As more people struggle, it also means that individuals that are gaining capital, that's more disposable income. And so that's what you're going to see is, as a result, again, long-term projected decrease in those interest rates. So that, again, helps to explain some of what we're seeing in the stock market, as we're not able to generate income in terms of interest on your money. So additional people looking to invest in the stock market in terms of finding a way to get a return on that money. And then the last thing is a acceleration of trends that we've seen over time. So as we're seeing an excess of capital, as we're seeing decreased labor, and then obviously with the health concerns of face-to-face interactions, we're seeing an accelerated push towards automation, generally speaking. So a lot of these trends around AI and digitization are likely to be faster as a result of COVID-19, as individuals and companies have been forced to make investments in these technologies for the immediate circumstances, and we'll see that continue to go at a much faster pace than it would have otherwise gone if there hadn't been a pandemic. And so again, just to wrap this all up, what does this all mean for me? What's the practical advice? And so the first thing I would say for any individual dealing with this reality is kind of to shift a way of thinking about looking for work right now and thinking about how you develop your career. Traditionally, we've been very focused on industry career pathways and saying, how do I grow in the tourism industry? How do I grow in the healthcare industry? How do I grow in a specific industry, in construction? And what I would encourage people to start thinking about is, given the fact that we've seen some of these industry-specific impacts, that certain industries have been more impacted by the pandemic than others, the best way to overcome this is to really focus on skill development as it builds resistance to these industry-specific impacts. If you have a skill set that is in demand across multiple industries, you're better able to overcome any downturn in a specific industry. And the other thing here is that it's also going to help you provide a pathway to family-sustaining employment. So if we're thinking about it in terms of if a specific industry, if there's compression in terms of available jobs in that industry, or if there isn't necessarily progression beyond a certain wage threshold, having this ability to shift between industries by thinking about your skills is going to help you create new pathways that may have not otherwise been possible. And again, the last point here is understanding this may just also be a point of necessity, given that the decrease in jobs that we're seeing is going to make it much harder for these entry-level pathways. And so when we're thinking about skills, we can think about the hedgehog and the fox. The hedgehog is a specialist. The hedgehog specializes in one type of skill and goes very deep in a specific skill, and that's all it's really focused on. The fox, on the other hand, is someone that's very knowledgeable across the board, but not specialized in anything. And I think the key to being resilient in this new economy is thinking about being both broad, like the fox, and having depth in one or two of these areas, like the hedgehog. So thinking about your skill set as this T or M shaped skill set, having a broad base of skills with a few deep technical skills, and especially focusing on the skills that will help you become resilient to these industry-specific impacts. Talking about technical skills, technology or core business, human skills, and hard-to-find skills. And so on the next slide here, what I've got, and so this is an overview of the current state of the top skills in demand in Charlotte. So we're thinking about, again, creating those skill-based career pathways and grouping the skills that are in top demand in this market based on those categories that we talked about. You can see the chart on the right-hand side, hard to find skills, human skills, where are those core business skills, and then what are those technical skills that are in demand. So again, thinking about these are the top skills that cut across all industries that are currently in demand, developing, going deep in a few of these skills, and specifically these resilient skills, and then also thinking about what is hard to find, what's going to give me that competitive advantage in the marketplace, but also establish that broad foundation so that you have that maneuverability and that you can transition from one industry to another. And so again, just to drive home that point even further, when we're thinking about transitioning these skills to career areas, you can see this diagram really shows you how different skills are demanded by certain career areas. And so you can see at the top, for example, you may not think of this intuitively, but communications is a highly requested skill in the tech and engineering space. The ability to communicate that information clearly and articulately to those individuals that maybe don't have that same technical background. And you can see that this provides a diagram that shows you having certain skills, while may not be intuitive how that's going to translate to a specific career area, they are transferable. And so if you were to look at this screen and say, given a set of skills that you had, you'd be able to trace those lines to say, where would your best career fits be? And then you'd also be able to think strategically about what skills should you develop if you're targeting a given career area or trying to shift from one career area to another.